Bill Berry. Bill, welcome, and it's great to have you here.
Thanks, Kelly. It's great to be here.
What would you say is the diagnosis for the oil market today?
Well, I think what we're seeing is continuing dynamics with OPEC Plus exercising some discipline. There's still a little bit of a hangover from the inventories that are out there. And of course, coronavirus is dampening demand. So those three things are all real important in driving the oil price as we see it going forward. And right now it's in the 40 range. That's probably not sustainable long term, but it's probably where we are for a while.
So do you think in the long term the sustainable price is higher?
Yeah, absolutely. There's just at today's oil price, at $40 oil price, that's not strong enough incentive to get production growth that's needed for the world and the world demands. So we're probably seeing long term something in the 50 to 60 range.
Sure, and I know that would make a big financial difference for your company. Tell me about the production that you've restarted and what the next kind of thresholds are that you're looking at.
Well, Kelly, we probably lived through probably one of the most tempestuous type of quarters I've ever seen in the 40 years I've been in this. Clearly the most volatile that we've seen in the whole time I've been in this industry. And we've gone from talking about black swans to now we're talking with flocks of black swans, if you will. If you look at what's happened with coronavirus, with oil price collapse going negative, with the Russians and Saudis, the price war. So all these things have kind of driven to a completely different market than what we've seen before. But going forward, I think there's discipline out there that's going to provide a little foundation for the price. And for our company, we brought all our oil production back on in August. So we're back up and running almost full tilt now.
And I know it's important you try to avoid layoffs as well during this time. I have one more question for you about the oil market. Overall, are we coming out of this, the U.S., having gained or lost market share to the rest of the world? Because we remember how difficult these fights were the last couple months about whether or not we were going to cut production.
Yeah, clearly with the constrained capital that's being spent in this environment right now in the United States, the U.S. is going to be losing market share on a worldwide production basis.
Well, if that's the case, is it just going to come back as the market recovers, or do you think this is a permanent loss?
No, I think it's just a temporary. What we're seeing now is with the reduction in capital spend, we're going to probably see a couple million barrels a day come out of the U.S. And as oil prices come back up and stability looks like is out there for supply and demand, you'll see companies start coming into a little bit more of a spend basis. But I don't think you'll see the growth that we saw in the past, where some companies were trying to look at double-digit type of growth. But we will see production coming off of a low of 10 million. We'll be going back up after we reach that low.